Hi guys, we're back. Thank you for waiting. Apologies for the technical difficulties. To carry on, just to dive straight into it, let's do a quick recap. This is a Q&A with Sam Hall from Startupbootcamp FinTech Singapore and lawyer Wan Hsi from Covenant Chambers. And we're talking about FinTech regulations today. If you have any questions about any particular aspect about FinTech and regulations, please type them in the comment box below and we'll get to them today in the next couple of minutes or so. So the next question that we have is, we know that there's been a lot of progress in regulations in the last couple of months, in fact the last year. And people are starting to compare Singapore and Hong Kong as countries in the region start to try and get dominance as a FinTech hub so that the most prominent ones will be located there. Do you have any thoughts about how they stack up against each other, Singapore, Hong Kong, and the rest? Maybe we'll start with Sam here.
I think from a FinTech perspective, there are different opportunities. I think from my perspective, I'm supremely happy with the role that MAS is playing in Singapore in pushing FinTech forward, in focusing on innovation and looking to further the industry. I think we have great links here, we have great ecosystem, we have across the banks, regulators, across accelerators like ourselves, startups, entrepreneurs. I think there's a real opportunity here. There's absolutely the same opportunity in Hong Kong. Whether the focus will be on the same things, I'm not necessarily sure. Hong Kong, obviously by its location, has huge links to China. The opportunity in China may not be the same as FinTech startups here, and there are opportunities in Indochina, in Myanmar, in India, and the links that we have here. So we work with our accelerator essentially across that whole area, and what we see in India and Indonesia and places like that is not the same as what we see in Singapore and what we see in Hong Kong. We see supreme appetite to solve the payments problem in these places. We see a supreme appetite for innovative solutions for credit. And I think that these type of things are not so relevant for the Singapores and the Hong Kongs of this world, because what we have here are pretty good, very sophisticated payment systems. There's always room to improve them, and MAS has even made the point last week that they really want to focus on doing that. But it's just not the same as what we see elsewhere in Asia. As far as Singapore and Hong Kong go, there's a lot more similarities between the two than between Singapore and, say, Vietnam.
Wan Hsi?
True. I agree with Sam in the sense that MAS has really made the effort to spearhead this whole FinTech, not Fed, but the FinTech FinTech space. For example, MAS has actually set up the FinTech Innovation Office, where if you're a FinTech startup or if you're a FinTech firm, you can actually consult them on grants, for example, on questions on the sandbox. So they're really open to consultation, and they're very quick, I think, in over the last couple of years to look at the existing regulations and making it more facilitative for FinTech companies to actually start their business and financial service offerings. For example, if you look at the sandbox offering, the Hong Kong sandbox only allows licensed FinTech companies, FinTech firms, and incumbents to enter the sandbox space, whereas for Singapore, we allow startups and new applicants, anybody who's actually interested in testing out a financial service. So that's something that's different, for example, in how the MES is actually very forward-thinking, I think, in their regulation of the space.
Thank you. If you're just joining us, this is AsiaLawNetwork and E27 bringing you a Q&A where the topic is FinTech regulations, and we're here with Sam Hall and Wan Hsi. Next question is, I think, one that a lot of FinTechs think about a lot. The question is, will the successful FinTechs of the future be able to do it alone? Or do they need the partnership of a big partner like a big insurance company or a bank? Exactly what Wan Hsi was saying. In Hong Kong, it tends to favor the incumbents, but in Singapore, they allow you to go alone. But is it possible in terms of the business sense as well as the regulation sense? Because banks, for example, have all these licenses as an everyday concern because they need it to do business. But it's a big uphill battle for small startups. What do you think, Sam?
I think it depends what you're doing. In some, and I think generally in FinTech, to work in tandem with an FI, with a bank, to have that collaboration makes it an awful lot easier for you. And it's not just as simple as because that gets you the access through regulation, right? That gets you the license that you need. It's not as simple as that. It's also to do with access to data. It's to do with access to customers. It's the strength and clout of these brands that get you to market. So if you have the opportunity to partner with existing banks and big players, my advice would be, by all means, go ahead, right? Don't give up too much, but you have to think about, the short, mid, and long-term goals, and often that type of collaboration helps you to get there. There's clearly an issue that in some cases you have to partner, right? It's the, you cannot sell securities online in some locations without having a license. For a startup, you'll find it very difficult to get the license because sometimes the requirement is, whoever it is at the head of the startup, the CEO has to have X number of years experience working in that particular sector. You may not have that. You may be a junior team. It may be the case that, you need to have your company to show X or Y number of years operating in this environment. You may not have that. You may have only been in operation for 2, 3, 4 months. So you'll strike out for a number of reasons. So if we look at, some of the East Asian countries where we're seeing, a movement towards some really strong wealth management and robo-advisory and things like that, but can they make these sales through their platform? Can they go beyond being an advisory platform and being an implementation execution platform? Often what they need to do is partner with a broker. On the flip side, we can see that, in some cases of fintech, companies are going on their own completely. And I think a good example is the challenger banks, digital banks. So we see in Vietnam now, I think the biggest digital bank there is T-Mobile, which is powered by a traditional bank. We see in Europe the likes of Atombyte, the likes of Monzo, which are full stack, built from the ground up. They are new banks. And they built themselves, and they don't need to partner with others. Now, obviously, that's not in Asia, but who knows where regulation is going to go? Who knows where we're going to end up? And I think one thing that I'm super excited about, one thing that I sort of hope happens, I guess, is that who will be the banks of the future? We look at the banks in Singapore now. We look at the banks across Asia. We look at the global banks. Will these guys be the banks, or will the banks be Facebook? Be Google? We're already seeing in China the movement towards this. Exactly. They have this huge number of potential consumers. If they can convert them into banks, they've got huge capital. They've got huge technological resources. So what's to stop them from tackling the financial sector? And we see it already. And we see that there are companies that they're buying and they're integrating with them who are doing this. But we're also seeing that they're looking to do this themselves. So where will we end up?
Great. So takeaway from that is, if you have an opportunity to partner with a big incumbent or a big bank or insurance company, do explore it for sure. Wan Hsi, do you have any thoughts about this matter? I guess.
Like, as what Sam was saying, the thing about the incumbents, they've got to comply with a lot of regulations, and that goes against the grain of fintech companies, I suppose, where fintech, you're meant to be agile, you're meant to be innovative, where you move quickly. And if you're bogged down by regulations and compliance, you lose the edge, so to speak, as a fintech. What banks and incumbents are doing now is they are making efforts to partner with fintech companies because they recognize the value that these fintech startups bring to their otherwise perhaps cumbersome or heavy set of regulations and compliance requirements that they need to have. So I would see it as a good thing if fintech firms and incumbents partner together, because at the end of the day, it helps everybody. Consumers get the best of both worlds. Some of the banks, we've seen some of the banks approach this differently by having their own in-house kind of innovative hub, but it seems to me quite a hard thing to do, because the thing about fintech startups, for example, they lack the finances, they lack the capital, and that makes them hungry to find a new solution to what they're facing, and to actually look at the pain point and say, I can do this better, I can do this quicker. while still trying to get around looking for capital. Whereas in a bank, if they have the innovative hub in the bank, they already have the finances. They don't need to think about regulation and compliance. So I think it's a good competition.
I think in Singapore and elsewhere around the world, but in Singapore you only have to look at last week's tour of the crawl of the innovation labs. If you look at the number of innovation labs that banks are running and bank-fueled accelerators, the opportunities for startups to partner and to take advantage of this is huge. And some banks, their strategy is we want to take equity in these startups. Some banks, their strategy is we want rights to the IP in these startups. But there are more and more banks now that are simply saying, we want to work with you for this particular pain point that we're suffering, for this particular problem that this business unit is facing. We'd like to work with you because we can outsource the development to you. We can do it quicker. We don't necessarily need to pay to build up the team inside. But one thing they're acutely aware of is that within the banks, they're super siloed. And these business units are not necessarily talking to each other. They're not necessarily integrated. And to get a yes answer to go ahead with something is incredibly different, and it will take you a long time. So if you can outsource this to a startup, then you can really move things forward quickly, and you can capitalize on great technology and great teams and really great ambition. So we're seeing these banks move to these innovation labs, and when you link that to potential opportunity for startups, and when you link that back to the question about should you collaborate or should you not, the opportunities if you do collaborate, particularly at an early stage, particularly if you're struggling for access or for traction, they kind of speak for themselves.
Cool. Thank you for that. We have another question that I think is something that you guys get a lot as well. There are many kinds and variants of fintech startups. We have AI, we have robo-advisory, cryptocurrencies, payments, crowdfunding, and each of these have their own specific challenges in terms of business as well as regulations. Would you like to comment a little bit about which one of these have the most challenging battle when it comes to regulations? And do you expect it changing, or do you have any advice for these people? Either of you, do you have any thoughts?
I guess, WanHsi, you're the expert on a particular regulation.
If we look at the payment space or crowdfunding, for example, I think the MAS has actually they made good progress with it. We are going to have the new payments regulation out soon, and that will harmonize the payment space a lot. What we haven't actually seen would be the blockchain distributed ledger space. And interestingly enough, one of the sandbox applicants, one of them is a distributed ledger applicant. So we're looking at a new regulatory space for that, because I guess that solution in that sense hasn't yet really been adopted by the incumbents, the banks. And so there's a lot of ground for expansion, and regulation hasn't really caught up. And apart from blockchain, I would suppose cybersecurity for cloud computing is another space. A lot of the fintech firms and banks and incumbents are outsourcing their cloud computing. So, whether it's storage of data, whether it's fraud prevention or KYC and AML, a lot of the data is actually stored in the cloud. So how do we actually regulate that space, especially when there are so many subcontractors? There could be many, many subcontractors, and it also depends on where, say, the data storage space is, data storage center, or if there's a commingling of data, personal data plus big data together. So I would see a lot of, development in that space as well.
Well, I think there are two things. I think there's the problem that startups have with regulation, and I'll come to that. But then the other thing is when you're operating in an area where there is no regulation yet, in many cases you can expect that somewhere down the road there will be regulation. And MAS takes the approach, and Ravi Menon was saying it last week, regulation shouldn't front-run innovation. So they don't want to sort of put blocks down ahead of companies to stop them getting where they're trying to get to. But if you don't know what's going to happen, if you don't know ultimately what legislation is going to say about what you're doing, it's like every time you turn up to play the sport, you're not sure how the referee's going to referee the game. And every new geography you go to where it's like that, you're not sure ultimately what it's going to look like. So you don't necessarily have a synergy across all your operations. To go to where it is regulated and where the big challenges lie, I think WanHsi picked up a really good point that we've had so many payment startups in the last few years. I think I read something perhaps in your article about Tech in Asia reckons that it's sort of 3 out of 4 that they see come through payments. So I think for the new payment guidelines, in terms of access for payment startups, it's brilliant because what they're essentially saying is you don't now have to fall into one of these, two things. You don't have to abide by all of the requirements across the two. All you need to do is abide by the relevant requirements for your particular activity, and it all comes underneath one regulatory structure. And I think that's brilliant for these payments companies. We see, with things like crowdfunding, with things like peer-to-peer lending, the rate of activity is perhaps slower in terms of on the regulatory side. And we've just seen in Kuala Lumpur, so there are 6 companies have just been given licenses for their equity crowdfunding, and that really seems to be a movement. In Malaysia, I was speaking to the Securities Commission last week, and what they're trying to do is focus on that. But we don't necessarily see the same elsewhere. So a lot of the time you fall into this grey area, and that can be difficult for startups. So in our experience with startups we've had through our program, sometimes it's the long delay and the long wait to really to get the licenses. And with payments, in the past we've seen the problem has been that there are just too many hoops to jump through because of this broad, all-covering regulation. So I think it's great that looks like, if not solved, it's going to be improved in terms of the process to get there.
Wonderful. We've a whole bunch of questions from the audience. We're going to go through a couple of them now. Cheek, you asked a bunch of questions. I'm just going to go over yours and come back to this in a moment. 2 people have asked, Kevin and Anon, do banks present a viable exit opportunity? We talked a little bit about partnering early with banks, for example, or big insurance companies. Or how do you guys feel? Is it likely that they could go it alone and try and exit at some point, selling themselves to these banks?
What do you mean by exit? As in an exit opportunity, as in to sell the company to the bank?
Exit strategy. I guess that's the case.
If the question is a bank a viable exit strategy for your business? You can work with the bank for 3, 4, 5 years, whatever, and they might want to buy out your technology, buy out your company. Then sure, maybe it is. I would say, why would you necessarily want to restrict yourself to working with one bank? So it's not the case that when you collaborate with a bank, you have to have exclusivity with this bank. Some banks may ask for it, but if you've got great technology and if you're in demand, you can probably negotiate with 2 or 3, certainly across different jurisdictions, and be able to provide for a number. What does that do to your bottom line? Obviously, it improves it. So I would say, as a default position, look at trying to partner and collaborate with as many players as possible. This will certainly help you when you come to raise funding later down the line, when you're Series A, Series B, Series C. How many partnerships and collaborations do you have with big players in the market? That will really help you. So I would say don't necessarily put all your eggs in the basket of one bank. Is it an exit opportunity? It depends on the bank's strategy, and it depends how critical your technology and your solution is for their strategy.
Yeah, I would say it really depends on your business model. I don't see why you would want to cut short the journey of that fintech by selling it, exiting with a bank buying it. With so many of the fintech nowadays, it's either a software as a service or platform as a service. So you can actually make use of that and have as many banks or incumbents as possible using your financial service, which I think is the whole point of fintech, that you make it accessible to consumers across a broad base.
Hi everyone, in case you're just joining us, just a quick recap. My name is Gebriel, I'm CMO at AsiaLawNetwork. We're doing a series of Q&As with lawyers. So today we have Wan Hsi from Covenant Chambers. She advises startups and other corporations. And we have Sam Hall from Startupbootcamp FinTech Singapore. I'm trying to say that 3 times. I can do it. So we're in the middle of it. We're going to keep going until 5 o'clock answering your questions. And the next one we have is from Cheek. So it's a little specific, but let's try and help him out. I built an app that tracks P2P loans and aims to facilitate their payment via Bitcoin and Ethereum wallets. He has a bunch of questions, but I'm just going to focus on this one. Is the Moneylenders Act relevant to my app? I'm also looking at anti-money laundering and anti-terrorist financing laws, but I'm not sure what I can and should do to abide by them. So this is from Chik, and I guess many startups face a very daunting array of regulations to jump over. So maybe you could give us, once you can talk a little bit about whether or not any practical advice you would give startups like this, how to navigate the various regulations that they have to work through.
I'm looking at your question and just trying to.
Whilst you have a quick look, Wan Hsi, what I'd say is, first port of call, go and read Wan Hsi's great articles, essentially about which regulations are applicable to which type of startups.
That's right. Thank you, Sam.
I mean,
I think
think
it a lot easier.
that will be a good starting point.
I can't actually say why payment gateways won't allow transactions like this. Do you have any idea which what the question is?
I know most other payment gateways won't allow transactions like this. Why is that? I built an app.
All right, maybe we'll come back to this. Maybe this is a little specific.
Yeah, maybe follow up afterwards. Maybe comment on Wan Hsi's article. But I think maybe it's the case that with a bit more context, Wan Hsi might be able to help you out.
With a little bit more context as to, because I'm not sure where your money lending is.
Yep. So as we all know, the regulatory sandbox is a potential option for startups who have not yet gone into operation. And I also understand that there are some parts of the regulations that can be relaxed and some that cannot. Why don't you tell the audience a little bit about what cannot be relaxed and is something that every fintech startup needs to pay attention to regardless of whether they're in the sandbox or not?
When we look at fintech regulation, we look at capital markets license, for example, which deals with advising on corporate finance or dealing with securities. The MAS, the regulations under the MAS are quite clear. So you need a certain base capital requirement, you need a certain set of directors and management, you need a track record, you need certain assets to be in place. So these are actually quite stringent requirements which fintech startups especially may or may not be able to meet, especially base capital requirement. It's actually quite a huge amount. The MAS, for one, they are prepared to relax some of these requirements. But again, I just want to clarify that after the sandbox expires, you would still have to comply with these requirements. So the basis of the sandbox experimentation stage is also for the fintech startup to actually get their regulation compliance in place. Now, the things which cannot be relaxed, that would be personal data, know your client, due diligence, anti-money laundering regulations, your countering of finance, terrorism, those regulations are strictly cannot be relaxed. They can't be relaxed, basically.
Do you have any comments, Sam?
I think fabulously well covered.
Wonderful. Next up is something very practical, and I want to ask both your opinions, and it might be very different. Who are the best people to help startups, fintech startups, navigate their way through this? Is it a lawyer? Is a lawyer necessary at all? Can they help? Does it make sense in terms of the cost? Maybe we'll start with Sam, and then once you can.
I think it's a really good question, because I think it's a question that a lot of startups have, and it's a maybe because you're playing in fintech rather than some other form of technology, you're slightly closer to these things, but you don't necessarily have deep experience of regulation, of the legal side of these things. I would say probably the best thing you can do as early as possible is talk, sorry Wan Hsi, but talk to the regulator rather than to a lawyer, as well as you can, because the regulator, and particularly in Singapore with MAS, they want innovation and they want disruptive products that will move the country, the economy, the country forward to becoming, this ultimate smart nation. So they're willing to provide assistance, they're willing to help you figure out, they might say to you, listen, this is not going to work based on what you've got, based on the existing regulatory framework. But if you think about X, Y, and Z, if you perhaps tweak this, if you approach this in a slightly different way, then you might be able to get it to work. Those conversations I think you should start having as early as possible. I think don't waste your time, building too much when you might not actually be able to put this out there anywhere. Right. And then, of course, once you understand fundamentally what the framework is and where you fall and which regulation you have to look at, then you've got to start to consider what does that regulation actually say? Because MAS is not going to sit with you and go through it, word by word. They don't have the time to do that. That's, I think, where you've got to start talking to lawyers, because you won't necessarily understand what that looks like. You won't understand, exactly how it all fits together. Some of that, let's be brutally honest about it, some of the language in this type of stuff is fabulously dry, and you maybe you wouldn't know what it meant anyway. So I think then you have to go to the expert. But I would say, first protocol, the regulator, and second protocol, the lawyer, to help you then, based on the feedback you've had from the regulator, help you implement that.
Before I go to Wan Hsi, the question is, do we need a lawyer for fintechs at the start? And Sam's answer was, always go to a regulator first before you go to a lawyer next. I believe when I was working in Wan Hsi in the article, she was telling me a bit about it. I actually went through some of the statutes and the requirements, and it's very, very dense. And I guess that's something that lawyers have gone through already several times. What are your thoughts about startups, fintech startups, and the requirement of lawyers? When should they engage a lawyer, and how should they work with a lawyer?
In my opinion,
yes.
You may not necessarily have to engage a lawyer right from the start, but I would say from the start, have the regulations and the compliance requirements in mind when you're building your business model. Because you don't want to be blocked, or you don't want to be stopped in the middle of building a product to find out that, right, you have all these regulatory requirements to meet and you can't do that, you can't go forward. So have that in mind and build that into your product, especially if you're dealing with personal data or opening account services, for example. You need your KYC, you need your anti-money laundering. So for that, you build that into your product so that it covers in the event that you actually do require regulatory compliance, and when you're sure that you do fall into that, then look for a lawyer where they can help you with your licenses. But the MES is very, very open to questions and consultation, especially in the regulatory space. And they do have a lot of incubators and accelerators, which can also help you in terms of putting it all together in a holistic manner, not just the product itself, but that it will work as a whole.
And I think if you think about what a regulatory lawyer is doing, they've got a wealth of experience. That's their job. So they spend their time looking at these types of things, and they've seen many before. So they've got great context to be able to, look at something and say, well, I understand the way this works, and I can make my decisions quickly, and I can tell you exactly what you need to do. Now, if you're an entrepreneur, your startup is probably supremely important to you, and it should be, because you should be phenomenally passionate about it, and it should be probably your baby, right, is what people say about it. Now, if, for example, it was like, oh, I need some bread, do you need to go to a baker? You can get away without doing it. You can just make your own bread. It might not be as good, but it's not that big a deal. But this is something that's super important to you. Would you, if you, were investing your life savings and you've never worked in finance, you don't know anything about it, would you invest it yourself? Probably not. You'd go to a professional to help them to get them to help you to do it. And I think we're talking about something similar here. When you're dealing with what is in financial services, the regulation is fundamental, because if you haven't complied, you can't act. Your company fails because of that. So because of the importance of it, of course you need to talk to people who know what they're talking about. And I think we probably all agree that they're lawyers.
Okay, cool. Another thing that we've all been hearing is how China has some very amazing fintechs, especially in payment tech, right? Mm-hmm. People who visited China have seen how incredibly ahead it is of even a country like Singapore or some countries in the Western world. Why do you think that is the case? How has it developed to that level of advancement? And how has regulations played or not played a role in that?
I mean, in terms of why has the development happened? It goes to the type of things we were talking about earlier. It goes to capital that's been available to pump into this. It goes to strength of technology. You can pick multiple countries around the world and say, why haven't they developed? Why aren't they in the same place? And the answer could be something like, oh, well, there's no infrastructure. So they're starting from a position so much further behind. The answer could be, oh, well, actually, they don't have great engineering talent, so they're not able to build out these products. Now, China doesn't have, perhaps in some areas, but China generally, if you look at the concentration of its talent and the concentration of its infrastructure, it's great, right? It's completely world leading. So if you take that and then you take capital that can go in, you take size of companies, you take scope of the market, if you think about the scope, the scale of China, all of those things kind of come together in a perfect storm, and that's what breeds success.
Wan Hsi, do you have anything to add? No? Okay, thank you for that. Okay, so next up is, there have been so many changes this year. Are there any other changes in regulations for fintech that you're expecting either in Singapore or in the region?
I think we've had quite a few good announcements last week, didn't we?
It's quite a bit already, right?
Yes, we do have the payments regulatory framework coming out, like Sam was mentioning. So in the future, there will just be one license that's required, and you kind of, whatever activity that you're doing, you kind of add on. So it's like a modular license. Instead of now, it's under disparate pieces of legislation. Another one would be the cybersecurity bill. With a lot of the services going onto the cloud and personal data being collected and stored, on the internet, cybersecurity has been at the forefront of regulation in the sense that, we have had companies being hacked, and it's easy for information to leak. So the cybersecurity bill is, I think, the MES is probably going to come up with a new bill soon.
And I think we've seen that there's, in terms of, is there going to be more coming this year? Then I don't know if there's going to be anything that's going to super shake the world this year, because we've had some, we're running out of time basically, and we've had some great stuff. I think another one to point out from last week is on the insurance side, in being able to sell life insurances. So this has been, and I was talking earlier about people or companies selling securities online, and the difference between advisory and implementation, and often the regulation that goes with that and the need to partner. On the insurance side, there's a problem again with, is the company in a position, the startup, in a position to be able to sell these products online? Or is the company simply aggregating, compiling, allowing you to manage, offering advice on what you should get, but not able to implement and execute for you? And up until this point on the life insurance side, we've had limited scope for that. And MAS has announced last week that actually it's going to be open scope on life insurances. So we've got a fantastic insurtech startup in our portfolio from the most recent batch called PolicyPal. And for insurtech companies like that who are looking to sell products online and to help you to manage your portfolio, this type of development is really good.
Okay, if you have any questions, we have about 12 minutes left, so please go ahead and type it in the comments below, and we will get to them and get either Sam or Wan Hsi to answer your questions. Now, both of you have seen and advised a lot of startups in fintech. Can you share a little bit about across the various batches of Startup Bootcamp? What kind of challenges do fintechs face? Do they tend to be regulatory related? And if so, tell us a bit more about it, and if you have any practical tips beyond what you've already told us. For example, reach out to the regulator first and early. What would you have the audience know?
I mean, I think the short answer is yes, regulation has been a problem for startups coming throughout, startups that we've worked with. And often it can delay things, it can hold you up, it can, sometimes, you need to get the collaboration to be able to access the market, as we've talked about. We've had companies, we've got a great company in our portfolio that it spent a long time working through the sort of red tape around payments to be able to get the license. It's fantastic, they now have the license. But to get to that point has been an onerous process for some companies. So regulation is definitely a challenge and something that continues to crop up. It depends what sector you're playing in. But to go to the question, what are these challenges? Is it regulation? Yes, it is, but it's not the only challenge. And there are multiple challenges. And I guess they've been, most people watching this will be well aware of, many challenges that face startups. It's to do with working capital. It's to do with getting your customers. It's to do with growing your customers quickly such that you can flesh out what your product should look like. Because your idea of what it should look like is probably not what it should look like, what the consumer wants it to look like, what your partners need it to look like. So these are the types of thing that occupy the minds of founders in fintech and in any other type of startup. Regulation plays a role, but it's certainly not the only role. It's just the fact that in fintech, regulation plays a bigger role than in other areas.
Definitely, regulation will play a role, but I think with all other startups, the main thing would be working capital. I think that's. I mean, you want your product to be successful, and working capital obviously would help things a lot better. And as with any founder, the product is their baby. So in terms of whether it's valuation or how successful it's going to be great. It's going to be like the next Facebook. But then you got to think about whether you're going to get capital from private equity or venture cap, and these are always the first problems that most startups face, I would assume.
We've got a question from Kevin McSpadden, and I'm going to read it to you verbatim. The crowdfunding equity community sort of built their companies first and then prayed that MAS approved the industry. And to Kevin, he said, it seems like a risky strategy that paid off. Is this a valid strategy? For example, if you go to the MAS and they say no, or if you think they'll say no, is this a valid strategy for them to just go ahead and build it anyway and pray that it works, it takes off?
I think you look at your particular sector, what you're trying to do. You look at who else is trying to do that in your area. You look at I think you can take a lot from the existing guidelines in other areas. So you can go and look at the guidelines and the framework, whether it's to do with payments, whether it's to do with securities, whatever it is. And you look, there are some things that crop up over and over again. You look at what it says about the sandbox. It says if this is something which offers manifest innovation for the industry and for Singapore, then more than likely that's something that they in principle at least want to support. So if you look at your product and you say, is it going to offer that? Is this going to be a solution that's going to make a big difference, not for one or two customers, but for a large group? Can this take the industry forward? If the answer to that is yes, and there's no regulation on it, then of course you're kind of playing in a gray area, like Kevin points out. So you then see, well, realistically, what are the risks? And this is just the balance that MAS is trying to strike, and this is the process when you're talking about getting into the sandbox. What can we relax to get you into the sandbox? Is there justification in the sense that will this be a strong enough solution, a big enough impact in the long term? If you can say yes to those things, what can we relax? But what is the risk of doing that? And how do we balance the two? I guess you have to make the assessment as a company, as a founder. But if you're going to place a big bet on this thing that you don't necessarily know what's going to happen. If you look around and there are multiple participants, you're not just competing with these guys in terms of getting to market and getting the customers, but you're also competing in who will be best positioned when the regulation finally comes, if it does come. Because if everybody's building it in a slightly different way, it may be the case that some of these companies are better suited, and effectively when the regulation comes, they're the ones the regulator wants to sort of, they're the horse they want to back. And that, you may find yourself in a position where you put all this time, all this effort, potentially a lot of money into it, and then you're kind of out in the cold. Once you're out in the cold, you've lost the advantage of moving first or second or third, and I don't necessarily believe you have to be the first mover. Many companies are very successful and not, but it's something to think about. So I think really, you've got to look at who's playing in the market. If you're the only one, or there are not too many, and really you should be talking to your competitors as much as you possibly can. If there is huge benefit to potentially had from taking this forward, if the risks can be outweighed by the benefits, then maybe you go ahead and take a risk on it.
Just take a look at the question again.
Oh, sure.
particularly with crowdfunding, there are different models. You've got the reward-based crowdfunding, you've got the donation-based crowdfunding. The MES is clear in that it regulates two types: the securities-based crowdfunding, that's where you lend and you get securities in return, and lending-based crowdfunding. Those two types of crowdfunding are regulated, and that's clear. So you will need a capital markets license for that. But in between, again, there's a sandbox, and I think with MES or with Singapore, it's easy in that there is a space for you to consult the MES. So always, I would say, just go to them and see whether you need regulation. Obviously, you don't want to be alarmed, or you don't want to warn them beforehand, but that's a good space to start for regulations. But securities-based and lending-based, you have to be licensed.
Okay, we're coming to the close, but don't leave just yet. I would like our two speakers to spend a moment to think about maybe 3 to 5 practical tips you want to leave them with, either summarizing everything you said, or maybe, I'm sure one of your tips would be to apply for your next Startup Bootcamp next year.
Yeah. I'll 3 tips.
Think a bit about that. In the meantime, I'm just going to tell them what's to come.
Okay, sure.
Okay. So this is the third in our series of Facebook Live Q&A. Next week, we're going to have Yeong, who is a very distinguished IP lawyer, come and talk not just about IP, but also about raising funds and equity. So be around to talk to her. She's one of the top 40, under 40 legal minds. So very decorated lawyer. That's going to be next week, Wednesday at 4 p.m. Let me just pass you back to Sam. And what are your tips?
So I would say number 3, do your research from the very start and continue to stay up on the game, so to speak. So do your research into what is the regulatory situation, the regulatory framework for my idea, my startup, if there is one. If there isn't one, the things we just talked about in terms of what might it be if it does come along. So that's number 3. Number 2, make sure that you are talking to, cognizant of the regulator and what they're doing. Make sure that you know what rules you're supposed to abide by, because you don't want to hold yourself up or get into worse trouble by not doing that. So I think number 2, you will learn a lot, you will progress quicker by engaging with your regulator, wherever that is. I think number 1, I've done this in order of importance, and number 1 is the most important. Apply to the Startup Bootcamp FinTech Accelerator in Singapore. Applications are open, they close at the start of February, so get your applications in. If you're a fintech startup, if you're early stage, if you have potential to have great impact in Asia Pacific, then please apply. If you want to know more about it, reach out, you can talk to the team, and that's your best bet, I think. Okay, wonderful 3 tips. Over to Wan Hsi.
I don't have the 3 tips because I'm not recruiting anybody. But the main takeaway I would say is most people I know actually take regulatory compliance as a burden. Now, instead of seeing it as a burden, take it as an investment so that your product, your financial service is robust and that it will actually work in the market. So again, like I said, factor in your regulations and your legislative framework into your financial service and into your product so that at the end of the day, it actually works. It's going to last in the market. And just an example, for example, Uber, they were disruptive. Didn't really consider the regulatory framework in the different areas that they went to. So, for example, India, their unions are really strong, and so they face a lot of challenges there. So in that space, your fintech financial service or product is going to be disruptive. We hope so, and technologically new, but put in your regulations as part of your consideration for your business model.
All right, so just one last note is that Wan Hsi is available for a quick consult. You can actually speak with her on a specific issue that you have, maybe regulatory or otherwise, with a quick consult. It's $49 for a 50-minute quick consult with Wan Hsi. You can find it at AsiaLawNetwork.com. And she's available. She's very passionate about fintech, so if you have any pressing issues, do reach out to her as well. And I think that really just about wraps it up. Thank you for spending time here. We hope to see you next week. Sam, thank you.
Thank you very much.
Wan Hsi.
Good to be here.
Thank you. We'll see you next week.
Thank you, Wan Hsi.